Hello and welcome to the BNP Paribas Asset Management Talking Heads podcast. Every week, Talking Heads will bring you in-depth insights and analysis on the topics that really matter to investors. In this episode, we'll be discussing ETFs. I'm Daniel Morris, Chief Market Strategist, and I'm joined today by Daniel Dornell, Head of ETF Research. Welcome, Daniel, and thanks for joining me.
Hi, Daniel. Thank you for the invitation. I'm very happy to be here today.
This is our quarterly update on ETF flows, and it's been quite a quarter. I think it's safe to say. We probably thought we had seen everything there was to see in February with all the volatility around AI themes, big rallies for hardware stocks, sell-off for software stocks, and then, of course, in March, we had the outbreak of the war. Can you talk to us, Daniel, about what the response has been for ETF flows in the first quarter?
Indeed, the first quarter of 2026, in absolute terms, was the strongest quarter ever recorded for European ETF, with net inflows exceeding 100 billion for the first time. However, we need to have a more nuanced analysis about what happened. It was shaped by the geopolitical climate, and we basically observed two distinct periods. In January and February, we had unprecedented positive flows. We broke previous monthly records, attracting between 45 to 50 billion of net new cash, which were record levels. March, by contrast, marked a clear slowdown, with net flows falling to less than 10 billion for the first time since early 2023. During the quarter, equity-focused ETF accounted for roughly 80% of the total inflows. The most striking trend was the strong demand for global equity products. They collectively attracted 37 billion. This is a continuation of the momentum observed throughout the whole 2025 year. This kept ongoing during March. We had continued interest from investors for global core exposures, as well as emerging market and European core-focused ETF. In terms of style, the defense thematic continued to raise investors' interest, obviously, with the current geopolitical environment.
That's interesting to hear that despite the volatility and the concerns we had in the quarter, you still had such strong flows for equity ETFs. How did it look on the fixed income side? Did you see notable interest in inflation-linked ETFs?
We still had roughly 20 billion net new cash for the quarter on fixed income ETF. The flow patterns were skewed towards the higher quality segment, mostly on ultra-short duration and sovereign bonds. During March, we had different trends. Overall, the ultra-short and govies positive trend kept on going. We had outflows from high-yield exposures. We also saw some outflows from securitized exposures, CLOs, covered bonds, etc. At the end of the month, we had a new positive trend on inflation-linked bonds, which started on US inflation-linked product, and this moved to Eurozone inflation-linked product.
I think everyone appreciates there's likely to be plenty more surprises and volatility coming out of the Middle East. Related to that, many would have anticipated gold prices would have rallied. If you look at historical episodes of oil shocks from the Middle East, gold prices do go up. That didn't happen this time. What did you see in terms of flows for gold-linked ETFs?
Overall, during the quarter, the flows on gold ETPs were negative. We had strong outflows towards the end of January and early February, with roughly 4 billion of outflows. In March, it was quite volatile. The first 2 weeks were positive, with roughly 500 million for each of those weeks in terms of inflows, but collectively almost 2 billion outflows during the third and fourth week of the month.
If I could summarize some of the points you shared with us, Daniel, notable change in the pattern over the quarter, very strong inflows in January and February, and then a slowdown in March, but still inflows. If we look at that by asset class, for equities, demand was primarily for global diversified equity funds. Defense was popular as a theme. Within fixed income, the focus was on high quality, short duration. And by contrast, you saw outflows from high yield ETFs, which is a change from the pattern over previous years. And then finally, following the outbreak of the war, you did see redemptions from gold ETPs. Well, Daniel, thank you very much for joining me.
Thank you very much again for the invitation, Daniel.
That's it for this week's episode of Talking Heads. If you would like more information about our capabilities in ETFs, please reach out to your asset management contact or check out Viewpoint. Our website for investment insights at viewpoint.bnpparibas-am.com. We recommend subscribing to Talking Heads on your favorite podcast channel, such as YouTube or Spotify. You'll receive your podcast episodes every week. If you like Talking Heads, leave us a positive review and a nice rating. You've been listening to the BNP Paribas Asset Management Talking Heads podcast with me, Daniel Morris, and Daniel Dornell, Head of ETF Research. Please do join me next week. Until then, take care.
This presentation includes a discussion on current market events and is not intended as investment advice or an offer of products or services by BNP Paribas Asset Management. Please keep in mind that the information and analysis in this presentation is only current as of the publication date.